Hello everyone, K Kim here from the Traders Club. Welcome to tonight's market update, the Labor Day weekend special. Today we're going to look at the S&P 500 index, Dow Jones Industrial Average, Nasdaq Composite, and we're going to look at dollar index, the oil, the Treasury Bond, the precious metals and miners. We'll look at Apple, Tesla, Google, Amazon, Netflix, Facebook, Twitter, and Alibaba. I'm going to go through all of that. Just give you guys kind of a complete market overview and what to expect going into next week. S&P 500 index was up 0.42% today. Dow Jones Industrial also 0.39%. Nasdaq Composite 0.43%. The small caps, the Russell 2000 0.97%. And that actually semiconductor was actually down 0.17%. You can see New York Stock Exchange transport, BIX got crushed. Wilshire 5000 also was up there, 0.54. So looking at S&P 500 index, we're currently trading at 2179.98 here. Here's the important part. We've been talking about this resistance right here, right? Or not resistance, but rising pivot. What I mean by rising pivot, it's a pivot. It used to be resistance, now it's a support, right? So that's what we call a pivot. When it hits that level, it changes its direction. It's a pivotal level, right? So it was a strong resistance back then here in April 19th and June 8th. This was a Brexit panic there and then got back up. We stayed above it, came down, retested it in August 1st, and this was where 220 EMA was residing. You see that kind of that moving average, that green, that almost light green moving average there, and then we bounced back and we came back down into that vicinity. Again, that's the level where the 50 EMA, you see that dotted pink moving average, there's a 50 EMAs hanging out. We bounced back up, and then we threw yesterday, yesterday we threw at this high wave dragonfly doji type of candle there. You see a lot of these long lower wicks. That's how you know that there are a lot of buyers in that vicinity. I think on my last market update video or a few times ago, we talked about this gap area. We talked about that how if we lose this support level right here, if we lose that 20 MA, because 20 MA acted support here back in August 2nd and 3rd. Remember, so and then we active support August 17 and also kind of hanging in that vicinity all mid-August. So if we talked about how, hey, if we lose that 50 at 20 EMA, make sure to watch this gap area. And once that gap gets filled, it becomes what? Instant support. Okay, so that's a general rule. Doesn't mean it always happen, but it's a general rule that once some of these gap gets filled, either upside or downside, it becomes either instant support, instant resistance. Opposite is true, where you see that there was a gap right here, and that gap got filled, right? Do you see this? There was a gap right here. That gap was filled on August 26th, and it became what? Instant resistance. So it helps to know these technical behaviors there. So once that gap was filled, it became instant support, and then a lot of buyers really supported that area, really protected vicinity. So looking at a more of a minor term sentiment, you can see, so last week or so, I think the sentiment was kind of a bearish in the minor term for the fact that it was kind of really zigzagging above these 10, 20 MAs. And a lot of times, the last few days, we actually stayed below 20 MA and 10 MA there on the daily chart, meaning the sentiment overall was bearish and we could expect the volatility. Today, though, what happened was the gap, another gap happened, and the gap is still open, right? So here, I'll tell you the important part. You don't remember anything about the market this week, is that this level, 2180. This is the level, right? So here's what I'm saying. Here's what I'm going to say. Hold on a second here. Let's see. Let me bring out that resistance level. The rising pivot. Where am I? There you go. Okay, I'm not trying that right. There. Okay, right? There. So, here's what I'm saying. So it's very, very important. Right now, we're still below 2180 resistance on the S&P 500 index. That level has been resistance last, this day right here, August 26th and the 29th and 30th. Do you see this? That's the level of resistance. Also, you can look at this as this instant double bottom potential reversal pattern that has not been confirmed. If here, let me go to line chart here, right? Like this. You can see a little bit easier. What is that? Double bottom. Do you see that? We bottom twice, right? You see that double bottom? You can look at it right there. It's a little bit easier. Sometimes, candle has so much these wicks and stuff. It's hard to see. It's good to kind of go back and forth. With the line chart, you can definitely see that this is kind of a double bottom type of formation. We have not confirmed. This is what we call a neckline. Okay, neckline, right? So for those of you who are just kind of understanding the technical analysis there, so that's a neckline there. That's a 2180-ish. So for this double bottom, I'll call it a double bottom reversal in the minor term because we kind of pull back. So maybe that's a double bottom reversal right on the. Remember, when it comes to technical analysis, the location is very important. This is a pivotal level. This is a pivotal level, meaning this level acted resistance before, and this is a support that has been acting as support back in early August. Okay, so here's what I'm saying. If on Tuesday, Monday, Labor Day, market is closed. If on Tuesday, until close, don't just look at just look at in the morning time or throughout the day. At close, if we see a pretty solid looking bullish candle that closes above 2180 on the S&P 500 index, I would say we'll continue higher. We make all-time high. Maybe not next week, maybe next 2 to 3 weeks. We'll make new all-time high, and this thing will ready to continue higher. However, because we're still dealing with volatile market, there is a chance if this thing gaps down, and if we throw something like island reversal, because this is a gap up, and if this thing gaps down, that will be an island reversal. Prepare for a very, very fast flush on Tuesday morning. If it gaps down, we may fizzle around a little bit, comes down here, fill this gap, and then get up. But if it gaps up, there could be a fast move to the downside where we break below this rising pivot. And if we do that, maybe I have you guys in another update, or maybe I'll write an article. But once we break below the watch that 50 MA, and then we got 100 SMA coming in here, you can do your Fibonacci analysis, look at some of your Fibonacci retracement zones, some of those levels to watch. Probably we got the horizontal resistance right here, where that's the same level coinciding with that 100 SMA, about 2111 or 2116 level on the S&P 500 index. But let's not get ahead of ourselves right now, because right now we're not sure we don't know how it's going to play out. Again, if it gets below above 280, we close well above 2180 on Tuesday, I believe it will continue higher. If we visit around, watch this rising support on 50 MA, but if it gaps down on Monday below 2171, that's an island reversal, and then we can draw this kind of resistance, and we may see a fast move to the downside. So it will be interesting to see how it plays out there. A lot of times you get this holiday, and then everybody's all, doped up, not in a drug, but doped up and all just emotionally riled up. Oh my God, the market is so bullish. And then they put so much money before the holiday, and then Tuesday morning they come in, and then this thing just gaps down, just ruins everybody's day. It doesn't always, and that's not a solid indicator. That's not analysis. That's just, I've seen that happen a lot, like at Christmas Day, New Year's Day. You guys remember 2 years ago or so? We made like all-time high, everybody just blowing the trumpet. I'm like, oh my God, the thing's gonna go, this thing is gonna continue higher. And then like a New Year's Day or next day came, this thing gapped down. I see stuff like that happening. Doesn't mean it's gonna happen, and that's not something that, that's not like a rule or anything that on the after the holiday is going to gap down. Nothing like that. I just seen it happening before. But in just saying, this is why technical analysis is very, very important, that we understand these levels. How are you going to trade this market without knowing these levels, right? So watch those levels here. So I just spent 10 minutes doing minor term analysis on the S&P 500 and 100 index. Let's go to Dow Jones Industrial Average. Again, Dow Jones did gain 0.39% today. Very, very similar sentiment here on the Dow. On the Dow, though, we did have this kind of a double top pattern, and neckline is somewhere about here. That's the neckline, right? That's the neckline here. We have not confirmed this double top. What it means to be confirmed, you want to see, if you want to short Dow Jones, at least wait till this thing break below, 18,335 level, and then wait till reset or retest, and then if this thing falls back, then there could be a much more downside. Again, let's not get ahead of ourselves to think that that's what's going to happen, because that's the data that is not there. Something that I always talk about is work with your tangible data. The data's at hand, right? I'm not saying that this level is going to hold. All I'm saying is this level has been holding. It could break next week, but as of today, it held. So meaning, let's continue to watch and see if he's going to break that level to the downside, or are we going to continue higher? If I draw a little resistance level right here, we're kind of still below that level. 110 and 20 MA moving sideways there. We do have gap that has been sustained and open. We do have a pretty solid bullish hammer candle right on that 50 MA. 50 MA does have a pretty good resume. Just recently, you can see the last time we pulled back to 50 MA, we did find that support. So we're back at it, and we did find that gap up here. But we do have this downtrend resistance, so you want to see this thing staying above maybe about 18,500, 518, 518. Man, the number's so high. 18,518 level. If we, again, same rule here. If anything stays above that, I believe it's going to continue higher, and it's going to nullify the double top pattern, right? Let's quickly go to NASDAQ Composite here. NASDAQ Composite, the 20 MA has been a strong support. You can see how well it respects this technical level. Ever since the Brexit panic, we got up, came down, hit that 100 SMA, continued gap up, and this thing just took off. Ever since we clear above this resistance right here, there's a breakout point. This is a level you could have gone long and then continued on. Actually, we actually did go long there, I'm pretty sure, and then continued higher. And then what happened was this thing came down and hit that 10 EMA and then got up. 10 EMA again, got up. We lost that 10 EMA, what, on August 24th? And then you can see that 20 MA has been holding. You see how picture perfect this is. You can see how it's in order, right? All you guys who still think that market crash is going to happen, the whole market meltdown is going to happen, you guys are probably the same people that been calling this thing since 2014, 2012, and 2011. I mean, obviously, Mark Favor, he's been calling market crash since 2011. Every year, this thing just kept going higher. I mean, NASDAQ rose more than double since its first market crash, and we're making another all-time high here after breaking above this resistance, falling resistance level. Now, we're back above 10 EMA. If I just draw a little resistance right here, you can see that we cleared that level. So I think NASDAQ looks more bullish now. We're holding this level. I think if we continue to hold that level of 5,239 level, 552.40 level, I think it's to continue higher as long as we stay above that. But again, if we lose 20 MA though next week, then next level to watch is, remember the gap. Remember what I talked about gap on the S&P 500 index? Remember I said that once gap gets filled, what does that do? It becomes instant support. So that's the next support at 51.67. 51.67. If we break below that 20 MA right there, but we're right here right now, so just don't guess things. If we continue lower, and we have another gap, like today's gap, right there. So that's slightly gap there. So I mean that's gonna also act as provided support, which is 10 MA, 20 MA, and then the gap fill area. So we got a lot of these support level that you want to watch should the NASDAQ start to deteriorate to the downside. But if we stay, as long as we stay above, 5230-ish level, I think this will continue grind higher, and you just keep watching your 10-20 MA, because once the market starts to get into this orderly fashion, it's gonna respond to 10 MA, it's gonna respond to 20 MA, it's gonna respond to 50 MA. And sometimes the volatility kicks in, and you're gonna see the bears coming in just straight flushing through the 10-20 MA, and a lot of times you'll see the 50 MA start to see some movement there. So these are levels to watch. And obviously some of the pivotal level of support is some of these levels that you can watch also once they start breaking down. But as of today, benefit of the doubt goes to buyers in the minor, intermediate, and primary term. I don't ever look at VIX, but I'll just quickly look at it today. Obviously you can see we have lower highs. And then we got lower lows. And that's a good sign for the equities. The problem with the VIX is when the VIX start making higher lows like this. You see, then that's a problem for the equities. And you know what though, let me tell you this. I don't ever try to analyze VIX so I can able to forecast the overall market. Don't ever do that. VIX is just crazy. VIX, you can never look at VIX and then say, oh my god, I know the secret. Because of VIX, S&P 500 is going to tank. I don't think that's the right way to look at things. Maybe you can use VIX as a more of a confirmational tool of some kind. But VIX is, we coming down here, maybe come back down to 1150 there. So again, let me just quickly recap the overall market here. The sentiment of the market is bullish as of today, but looking at S&P 500 index here, we're still below this 2180 resistance. If we do a gap, we see a gap down, it could be a minor term bearishness could come in, and I talked about some of the support level you can watch. And so that's the level to watch. So next few days will be important. Monday is closed, market is closed. So Tuesday and Wednesday, if Tuesday and Wednesday we can have to stay above 2180, I do believe market is going to continue higher, make new all-time high, and keep grinding higher. At least, maybe next 2, 3, 4 weeks. But if we start to get below this level and start gapping down, I do think that there could be some fast move to the downside. Doesn't mean whole thing is going to crash when that happens. I don't think that's what's going to happen. I think if that does happen, just watch some of those levels as support levels. Some of the 2100, some level like that. We got 100 SMA there, we got 50 SMA there. We got some of the gap here right here, but I think 2120 is also a good level of support. But we'll talk about it when that happens. So as of now, we'll deal with this tangible data, and I'm just watching on Tuesday and Wednesday if we can able to stay above 2180, 36 level and able to close above it. Because a lot of times what could happen is, let's say we get a gap up and then we see something like that, then that's gonna be a kind of bad news in the minor term for the bears or for the bulls, right? So you want to sustain it. You want to see this thing closing above. If you're a buyer here, if you're a bull here, you want to see this thing staying above 2180 after close on Tuesday and well above it, maybe 2187, 2085 or so. But if we close below 2171 on Tuesday, then I think there could be something that could bring us down to some of those levels. And remember, there's another gap here on the S&P 500 index. Remember what I talked about? Once gap gets filled, becomes instant support. So those are the levels to watch here. Let's look at dollar index. I'll go through quickly here. Since our last complete market overview, we've been holding that 2411, 2398, and then we've been kind of cultivating higher lows, higher highs type of action there. We kind of have this kind of a minor to intermediate term uptrend going on, but we're still dealing with a lot of pressure from the sellers with this resistance coming down. So I think we're kind of in the no man's land. We're just kind of digesting its gain. You can also look at this as possibly big picture, kind of a bull flag type of pattern. But see, I don't ever trust these kind of big pattern because this thing can break either side, either upside or downside. Nobody knows. So I think right now though, I think the overall sentiment in the dollar index, I think it's more of a neutral state, looking at more of a big picture. Minor term, I think kind of a neutral. Intermediate term, we got some kind of a bullish sentiment going on there with higher lows, higher highs. So let's kind of continue to watch it. Let's look at oil. Oil, this is precisely what you have to understand. I remember I talked about this last time. I mean, there are people back here in about $15 price level. I remember people were telling me, again, this is not a professional trader, just some spectators who've been looking at the market. They say, hey, it's $15, so I bought some here, and I thought, hey, how can it go any lower? We went so much lower. I mean, can it really go any lower than this? Well, I told him it can. But he's like, well, but I just thought, hey, there may be a good probability it could actually bottom here, continue, because I really don't think it can go any lower. See, that's what people think. That's not sound analysis or sound judgment that, hey, it went lower, so I don't know if it's gonna go any lower. Well, it can. The bad news is it can go much, much lower. A lot of times people look at S&P 500 index that is so much high. Well, can it really go that high? Yes, it can. Go back and look at 1980, 2000 market reaction. It just kept going. Just because you think it's high enough and it needs or it deserves or due for a pullback doesn't mean it must. See, the word due is a very foolish thing. Nothing is due in the market. It's going to do whatever it's going to do. That's why we respect trend. If it's an uptrend, you give benefit of doubt to the buyers. When it's a downtrend like this on the oil, then you give benefit of doubt to the buyers, to the sellers. And you know what though? These things a lot of times do a lot of fake outs and fake downs. You can see if you've just been completely obsessive with these downtrend lines and support lines, resistance lines, you thought, hey, you break below this, support, so it's gonna go lower, and then you start shorting and it goes right back up. And then finally we break above this downtrend resistance for about a few days. You see right there, we finally break this really, really long resistance. Oh my god, it's gonna break out. It's finally reversed. And then you're happy for about a day or so, and then it just goes right back inside. You see, so you cannot be obsessive with these support and resistance lines because they're not trustworthy. What you really have to understand is the big picture perspective of trend lower. Once we get in a downtrend, it can go much lower than you can expect, right? I mean, this thing tanked. Just because it tanked from 40 to 15 doesn't mean it's bottomed. You need evidence before we can say this. So we're still on a downtrend. We still have lower highs and lower lows here. Next support is at 936 on oil fund here. And so that's the level to watch. And if we maybe bounce here, then some of those level to watch. But we got all these 1020 MA falling. So definitely stay away from this market unless you want to short this. But it's gonna continue to fake people out, and any bottom colors or it's gonna be difficult. We do have. I'm just looking at my other screens here. Some of the monthly oscillators are getting into the oversold status. Some long-term oscillators are. That just still doesn't mean it's ready to reverse back up. And you could say, well, what would you look for a complete reversal on oil? Okay, well, I would want to look at something like this, something like that, like huge inverted head and shoulder of some kind. That will be a major reversal pattern, especially after tanking like that. You need some major reversal pattern. Let's go to Treasury bond there. Treasury bond's been just moving kind of sideways, kind of holding this support level there. I think minor term, bit of a neutral, like you got this maybe a bull pennant type of pattern. We're holding that 50 MA. You can see, hold on a second, guys. So you can see that 50 MA. We're holding that level, so we got resistance here, we got support there. Again, I don't know how it's gonna break either upside or the downside, but I think if we lose that 50 MA, I think next level is 137.17. Remember we have a gap right here. Remember we talked about that it's not a general rule of gap. Once gap gets filled, it becomes resistance. So if this thing breaks to the upside, then I think next level target is about 142 there. We got huge gaps here too as well. So some of those levels, we got 100 SMA there, 200 SMA there, 131. Some of those levels to watch. Let's look at GDX. I don't want to go into all of it, but I want to look at GDX there. GDX, finally GDX actually broke out of this. And we had a pretty big rally here, and then we actually never filled this gap. You can see We still haven't filled this gap. Last time when he was not able to fill this gap, that's how we kind of saw that move there. But ever since he failed to fill this gap, it started coming down pretty fast. Also, we have this neckline. So maybe that's a old support, new resistance. If this can get rejected here, probably go back to about 2204. Remember, there's a gap here. Remember when we talked about gaps? So if that gap gets filled, it could become instant support. So right now, current resistance is that neckline, you know, about at 2765 on GDX. So that's the level to watch. And if we lose that level, then possibly we'll go down to about 2204 there. Let's look at, actually, we'll look at all of them. Gold shares. Gold shares were just right above 1050. We have still 20 there. We do have kind of resistance level to watch right here. Here. So that's a level to watch. You wanna, if you're a buyer here, you do want to see this thing getting above that level. But remember what we talked about, this long term. Oh, I forgot to show you guys on GDX also. Where was it? Yeah, this long-term resistance is a concerning signal there. It's a concerning signal there. We have that on gold. Gold is from all the way to the top. This is a major primary term resistance. We hit that level. It's rolling. You start coming down here. Silver is from this peak right here, I believe. Yeah, right there. Just right on cue, right? Here, and here. So you can see we got layers of resistance. Yes, we broke out of this resistance, got up. Which one did it hit? This resistance now. So it's gonna be kind of a difficult road as long as it stays below that level. So if you're, you know, long in silver, gold, and miners, and you really want to see this thing thrive, you want to see all these GDX, GLD, silver, SLV, all these, you know, stocks, they stay clear above this level in the next few months there. So we'll see how that plays out here. Let's go to the equities. Let's look at Apple here quickly. Apple. Good news is that Apple has, you see that, remember we've been talking about gaps all day. Remember what we talked about? When the gap gets filled, it becomes instant resistance. And that's what we saw, right? And we found support right on Fibonacci retracement zone right there. Pretty close to it. 38.2% is just the vicinity right there. That's where we bounce. So we have kind of a higher low going on there. So in the minor to intermediate term, I think that's a good sign. What we want to see, what the buyers want to see at this point is this thing getting back above at 112.20. What I'd like to see to really fill this gap and then act as resistance, maybe a pullback, and then do something like that. And there is article that I wrote right about here. 3 reasons why Apple has bottomed. This was back in July 26, 2016. So that was a, you know, few months ago here, and so you can kind of look at the big picture analysis. Obviously, this is a primary term analysis, so you can go ahead and look at that and see how it pertains to today's move. But looking at more of a minor term here, you can see we're trying to stay up 1020 MA. So if we can have to continue higher, now that this gap is filled, maybe we can get that out of the way. If we can get above 109, the next level support of 112.21. I do think though it's going after this gap right here at 113.38. But if the market should come down and then Apple start to lose, you know, continue lowering, break below 105.68, then I think there's a much bigger issue might be ahead. We do have this huge gap, but I'm not sure if we'll go all the way. At this point, it's tough to say it's going to come all the way down and break that or fill that gap. We do have 50 MA residing in that vicinity, 104.18. That's a level to watch. 100 SMA, 200 SMA coming down, so some of those level to watch. However, let's not talk about that right now because with the tangible data that we're staying above 10 MA. So I think minor term sentiment stays bullish as of today. We do kind of starting to slightly clear this resistance there, trying to stay above the water, and then maybe we can get up to about 113 there. So let's continue to watch it. I'll go through this quite quickly here. Tesla finally coming down here, finally lost this resistance, or finally hit that. This was a bearish engulfing pattern, and then we started moving sideways for a while, but we lost that level, and then we also lost this rising support. So now the gap got filled, this gap, remember we've been talking about gaps all day, and this never became instant support, so we lost that level. Okay, so get rid of that, and then what do we happen? We fill this gap now. So let's see, we've been talking about that once the gap gets filled, it becomes instant support. So if now they finally filled this gap, let's see if we can able to find some support there and maybe, make some move to the upside in the minor term. I do think that we're working with the overbought status in the minor term. I think there might be some overbought bounce coming next week that could possibly get up to, some of those levels right here, about 217. I think at that point, if this thing continues higher like this, I think that buyers can able to really sustain these higher lows as an uptrend. However, if this thing does bounce and then we get rejected on this 100 SMA and continue lower, then that's a problem for buyers, and bears might come back in. So some of those things to watch there. Looking at Google, since we traded this move back in June or so, you can go ahead and you can go here. You can see 11 months ago see how we played Google getting ready for big move. I was talking about this was back in when it was 550 that I was talking about. The target price was 800. Ever since then, it's moving sideways. We had a good earnings reaction. See, there was a gap there. We got up, came down. Let me see. I want to see. Hold on a second. So I think, here you go. Those are the levels to watch. I think currently we're staying above that 10 EMA. So I think, and we did clear the resistance. You can see the life is showing up here. So I think you remember what I talked about on the S&P 500. If S&P 500 makes bullish move on Tuesday and Wednesday, I do believe Google will have a bullish day and then bullish week. At least a few weeks or so, get back to about 1182. And those, I think that will be the target there for minor term. If we lose 789.39 though, then the gap fill is likely, and when the gap gets filled, probably gonna act as support and then see how it plays out then. But right now, I think minor term sentiment is bullish. We're staying above 1020 EMA there, and again we got this minor term gap over here too. So that's the level to also watch, that gap fill. But definitely the resistance, we're clearing above the resistance, so that's a good sign. I think there's a good chance we'll get up here as long as the market is bullish on Tuesday and Wednesday. Amazon continue to respect. This is just perfect, picture perfect stair step uptrend. You see stair step go up, down, go up, down, go up, out, and we retest it again. Go up, let's retest this again. Just picture perfect uptrend there, and this is why with technical analysis you can continue to trade this. You know what I mean? You can able to know where your stops are. You can able to know where to add to your positions, where to close it out. I mean, this is just picture perfect bullish uptrend we've seen since February of 2016 there. So benefit of doubt continues to go to the buyers. I think the only problem with the Amazon though, looking at a monthly chart, I mean, we are dealing with very, very overspot status here. Some of these levels you can see. So maybe there might be pullback, but remember what I said, just because it's so high up doesn't mean it has to pull back. There's nothing due in the market. It could keep grinding higher. So at least as of today, we cannot just predict that it's going to pull back because it's at the overbought status. It could keep going higher. But let's say if it start to show us some evidence, like something like this, and we have a lower highs and lower lows, then we can say perhaps then, excuse me, the Amazon is ready to pull back. And when it does pull back, instead of just freaking out, I'll wait for opportunity. You know, look at your Fibonacci, and it goes to about 50%. Look for kind of what level to add after a bounce there. But right now, I think benefit out continues to go to the buyers on Amazon, and looking at a more of a minor term perspective, we're kind of clearing this resistance. We gap is held We have a little bit of red candle though, but I think if you can able to hold 772 or even 770, if you can able to hold 770, there's a good chance to continue higher. Again, it will be important Tuesday and Wednesday how the S&P 500 index will behave. If we behave in a bullish way, I think Amazon will continue to grind higher. So is Google. All these equities will continue to follow the market there. Looking at Netflix. Netflix has cleared this kind of a prominent downtrend resistance there, but that's really not enough at this point though. We still kind of in this downtrend. Remember what we talked about with the oil and everything else? Sometimes it would, clear this resistance and then everybody's all like, oh my god, it's gonna ready to get up higher, and then it just disappoints, right? So instead of just looking at being obsessive with these resistance or support levels, what I'd like to see is really, I like if the price actually can able to get above 103.37, I think that there could be a good cultivation going, higher lows, higher highs there. But let's see how it works out. I think at this point we're in a no man's land. I really don't want to short here. I don't want to go long here. I just want to watch and see how it plays out. But we are staying, last couple weeks or so, we are staying above 10 EMA. Just keep grinding. You see that how it's just perfectly respecting the 20 EMA and 10 EMA. And sometimes with the shorter term trade, I don't do anything short-term trades. I used to years ago. I don't do that anymore. But if you're more of a short-term trader, I think you can really use these 10, 20 EMA as kind of a guide to your short-term trades there. Let's continue on with the Facebook. Facebook is looking freaking bullish. Monthly chart is crazy. You can see that's a monthly chart. It just keeps on moving higher, right? But again, just because it moves so much higher doesn't mean it has to pull back. You could say that we're due for a pullback, but it may never pull back. It may continue ground high. Nobody knows. But at this point, as of today, is a minor term sentiment. We are continuing to make. We cleared this resistance right here, and then this was an old resistance new support. You can see perfectly respected. It came down to 10 EMA, and then we're rising higher. So again, this is a market where it perfectly respects these moving averages. Even on the S&P 500, all these stocks we talk about, 10 EMA is acting as support. If we lose 10 EMA, it goes right back to 20 EMA, and then it finds support. So that's why these moving averages are crucial in your trading. It's crucial in your trading. And if we lose 20 EMA, next level to watch is 20 and 50 EMA. You see that 10 EMA has been acting as support here for a long time, and then now when we broke with 20 EMA, so we'll continue to watch that. I think once we broke above this, we threw a little bull flag, and then we're continuing higher there. I think, again, if the market is bullish on Tuesday, Wednesday, I think, Facebook will continue higher. It looks to be bullish there. We're staying above 10, 20. And Twitter, we got two more there. So Twitter's been getting some attraction among traders that finally we may be getting some new highs and maybe some kind of an uptrend type of price action there, at least in the intermediate to minor term. But keep in mind that we're still dealing with this kind of a downtrend. So some of these levels, even if this thing goes back up here, some of these levels definitely level to watch with a lot of these resistance levels. So I can't say right now as of today that Twitter has completely bottomed. We have some pretty solid signals, but I just not ready to go do anything long term to the upside at this point. I think the short term might be a little bit more beneficial at this point. We had this gap here. Gap got filled and acted as instant resistance, shooting star, but we're getting back up here. If we can stay above that, I think there's a good chance we'll continue higher. We are staying above 10 and 20 MA. That's a good signal. Minor term sentiment is bullish. Next resistance is right up here at 2088, and I think if we can able to get above that, there's a good chance we'll get to about 23 and 24, depending on the market situation. But if we hit this resistance, we gotta have to watch out for the double top. But don't worry about that now. We'll worry about that when it gets there. But for now, I think the minor term sentiment is bullish. Intermediate term, I would have to say, still working with the bearish kind of connotation there. The wind is still blowing to downside. Obviously, primary term, we're still in a primary term bear market. So I could look at this as a kind of a little bit of an up move in a bear market. So still very cautionary signal on Twitter. I mean, if you're doing your fundamental analysis, you think that Twitter is a solid company, you're willing to hold 10 years or so, I think then maybe it's a good chance to buy it here. But remember what I talked about oil though. Just because it came down much lower doesn't mean it cannot go any lower. Right? It could. So I would actually hold off a little bit until it gives us a more solid, solid major primary term reversal pattern before investing on Twitter there. Lastly, I'll let you guys go after this BABA. I think BABA do have pretty solid, you know what? Pretty solid reversal, major reversal pattern. So right there, so we got this major double bottom, and then this is what we call neckline. We blow right through the neckline, right on the earnings day, and then we're staying up. So I think there's a good chance we even retested this level as all resistance becoming new support. I mean, picture perfect, you see. And then we have gap area right here. Remember, we've been talking about gap all day long. You see what I talked about. Once the gap gets filled, it becomes instant resistance. It did that. But when it pulled back to next level of pivot, all resistance, new support. Isn't that interesting? And we made new highs today, right there. That's a good sign there on Alibaba. And I think there's a good chance that I think next level of support, let's see, about 104.92. As long as the market, we do have a gap. Actually, we have a gap right here. Right there, you see that gap right there? That gap. I'm gonna actually want to put 103.17, because remember what we talked about, gap gets filled, can become as resistance. So I think next level of resistance will be 103.17, but we have a very well cultivation of and kind of a establishment of an uptrend. So benefit of doubt goes to the buyers. You're looking at more of a minor term Alibaba. You can see that 10 EMA continue to act as support. Very, very solid bullish move there. We got some good volume action going on as well. So I think benefit of doubt goes to buyers in Alibaba. I think it might be though also Alibaba has completely reversed, kind of maybe even getting ready back up to primary term uptrend. Looks kind of a lot like how Facebook reversed maybe. You see how Facebook did something similar. This was a major resistance there. We kind of had this, not a double bottom, but kind of this higher low there, and we had that earnings gap, and then it took off and never looked back. So maybe something like that. Doesn't mean it's going to happen exactly like that, but something similar we are seeing on Alibaba there. So I think there's a good chance. I think it's a good thing to kind of keep an eye on Alibaba. This is something that maybe you can continue to swing trade or position trade, and I'll be continue to watch this, see if there's any kind of opportunity. Have a great long holiday weekend. I just went through a complete market overview, and you know what though, if you really appreciate these videos and it's helping you somewhat, I think best way to connect with me is just if you want to not miss out these articles and videos, best way to them, you can follow me on YouTube, Twitter, and Stock Twitch. But the best way will be you can follow my blog at twotradersclub.com. You can put your email address there. There will be no spam. twotradersclub.com. And every time I do a video or articles, you would always get that notification on your inbox. That way you can always connect with my email or my articles and videos. And if you have any questions, you can feel free to leave comments on my blog. But until next time, have a great night. Enjoy your holiday weekend. Next week, remember what I talked about? It'll be important to see how it plays out there on the S&P 500 index. Very, very important level we're looking at. Let's see if we can able to stay above 2180 level. If we can able to stay above it Tuesday and Wednesday, I believe it will continue higher and make all-time high. Have a great night.